Hello once again, everybody. This is Rich with High Percent Trading. Today's video is going to show how to trade the preferred way of entering and managing the Wave 2 Gann Elliot setups. We did a prior video, and you should have a chance to review that one as well. That's trading the Wave 5 setups with the cyan band. I just want to point that out. This is the Wave 5 setup with the cyan band. That video went into great detail on the best way to trade those setups. Today's video is going to cover the Wave 2 setups. Now, the Wave 2 setups are important in that if you can catch the beginning of a Wave 2 move and are fortunate enough to complete it through its at least Wave 5 cycle, you can make a fairly good profit on that. Only about 30% of the time are markets moving in a harmonic manner. So only about 30% of the time will you catch a Wave 2 trade and have it go at least to Wave 5 completion. That doesn't mean that the other 70% are not good trades, and I'm going to point that out because you can make very nice profits even catching the Wave 2 at the beginning, and then if it doesn't move harmonically, still move a great distance. So I'm going to show that. Now, on this particular chart, this is the ES, and we have two Wave 2 setups to talk about. This is the first one here. It was a long entry. This is the second one here. It's a short entry. This software is what's called the QB3, the quarterback 3. So it's measuring the harmonic moves of the Gann-Elliot combinations. It's also using another indicator in here called the SEER to help filter that. So once we have the good harmonic setup on the Wave 2 on a long, in addition to that, we have to have a blue bar to go long or a magenta bar to go short. And the software does this automatically. So let's analyze this first trade. This was a Wave 2 setup. We had a initial target here, a Wave 2 target right here. I believe the ES came within one tick of that. And generally, the Wave 2 targets are very spot on, simply because they're generally, by its definition, it's not an impulse wave, it's a retrace wave. So there's not a lot of energy usually moving as we retrace into a 2, and that's why they're good to trade. So this was the first entry here. Now, normally when you get the entry, I like to go with a stop that's underneath the previous swing. Normally that previous swing would be right here. The problem was that this trade entered a little bit late because of the filtering going on in the bars. So the good stop was under here. It's always nice when you can get a trade at the beginning and it just moves in your favor. You can see under this circumstance, the entry was right around 27, let's call it 45, and it moved all the way up to the 27.5175 level. That's about 6 handles at about $50 a handle on a contract. So that's not a bad move if you held it anywhere up into this area. And again, this is a good example of a Wave 2 entry that did not move in a harmonic manner. In other words, we weren't able to complete the progression. On the other hand, here was the short entry. This one did complete its progression. You can see the entry here, and then it went on to do a 3, 4, and then all the way down to the 5. And of course, this would have been the Wave 5 exit and entry long. But as I indicated, that was the subject of a prior video. Stop management again off of this trade. Once this trade was initiated, the stop, in this case, because our swing is right here, is designated by the dot. Our prior swing is here, so a good stop, it's just an extra tick, is right above here. And again, this stop held. So here's 2 instances where you were able to enter the trade, really didn't take very much in the way of heat against you, didn't hit the stop, and eventually turned out to be a nice trade. I'm going to show some examples where that's not the case, because not every trade works out that way. And we're going to talk about the proper way, in my opinion, to handle stop management. So let's take a look at a couple of other markets on these Wave 2 Gann-Elliot setups. All right, now this is the Japanese yen, the 6J Japanese yen contract. What I'm showing here works on every one of these markets because, again, this software is looking for the proper combination of Gann, Elliot harmonic combinations. So we had several wave 2 trade entries here. I'll point them out first of all, and then we'll talk about the management. This was the first entry here. That was the short entry. This was the long entry here. Again, it's only trading the wave 2s that I'm showing, not the 5s. This was the 2 entry here. This was the 2 entry short here, and we have one more here on a long entry. So let's talk about those. Again, let's talk about the proper way, the preferred way to trade these as far as stop management is concerned. And we only take the first arrow. Notice there's 2 arrows here, but the first arrow was right here, the long entry. Your stop would have been right up underneath this dot. And depending on how you managed it, this one did not complete a wave 5 cycle, but it did have a nice profit initially, and if you're able to hold it, it continued on. It never did come back through the stop here. As we moved further on in the session, we got past what I call our pit open in the equities. This chart is on Pacific time, so this is around 7:30 Pacific. That's 10:30 Eastern. We had another wave 2 long entry, and again, your stop would have been right here, right underneath here. Now, this circumstance went on. This went on to make a very nice profit in here, but it came very close to getting stopped out. And sometimes traders put their stops a little bit too tight. And again, the preferred way on trading the 2, just go up under that swing. And I'm going to show what happens if the stop does get hit. In this case, it did not. It came within a tick. But if it did get hit, I'm going to show, I think I've got at least one more good chart example to show the best way to manage that. All right, the trade here was another wave 2 here, right here. The entry, again, look at the first arrow. Your stop would have been right above the dot. We came close again to test it, but it sold off, and this completed the wave 5. And I actually misspoke. I think I identified this at the outset here as a wave 2. This is a wave 5 entry. So we're not going to take that one into consideration because, like I said, we covered that in the prior video that I urge you to watch if you haven't seen it. So again, on the yen, 3 trade setups for this day, all of them very nice, very low risk, high reward trades, and that's what we like. But let me show an example now where you had to work a little bit harder, where you just didn't get in the trade and it went off immediately in your favor, because that's what separates a successful day of trading from one that's not. All right, here's crude oil. Now, this is going to demonstrate a little bit later what happens when the stop gets hit and then you're looking for a re-entry. This should look familiar to you by now. This was the wave 2 long entry here. This is a great entry. You can see that we came, I think, within 2 ticks of the wave 2 target that the software predicted, and then this one actually went on to complete a wave 7. So it's always nice when you can get the wave 3 thrust, the retrace, and then into the 5, and then it's bonus money up in here. But again, this is the wave 5 up here. We're not going to talk about that because that's prior. But this was your trade setup here. Again, your stop would have been right under here. So this is an occasion where the market took off and actually completed a very nice move. Here's the short entry. Here, this is a wave 2 short entry. Again, your stop would have been right above the dot, which was right here, and it never took it. So that was a good trade. Now, this is what I wanted to show. This is a trade setup that initially you got a pretty nice little scalp on, but if you were trying to hold a runner, it didn't occur, okay? You could have gotten probably close to about 8 or 10 ticks on a scalp as we moved up here. But as a lot of traders do, and I recommend they trade in multiples of 2, trying to hold the runner for the big run. And of course, your stop would have been In this case, either up under here or up under here, depending on what your appetite for risk management was. Once you got a nice scalp trade in here, I always recommend coming up under this. So this eventually would have got stopped out right here. Okay, and this is where the preferred way of re-entering takes place. Of course, in your mind's eye, you can normally see a line through here. This, in other words, your stop area would have been here. You would have gotten stopped out there. I can put a horizontal line here to show that, but a lot of traders will be able to eyeball it. But it's a good idea. Put the line up. All right. So this is the important line right here. And what we're going to do, unless there's another wave 2 entry, in other words, if we had a wave 2 short entry before we got another re-entry, or if we had a wave 2 long entry before we got another re-entry, this would have been negated. But this is the important line. As it came down, it would have hit the stop. Everything is still in play. Everything is good. Once we move back above this line and the bars turn blue again, you can re-enter that trade. Where would the stop be? In this case, the stop would be up under here. So that's the trade re-entry right here. And again, this would have produced a nice profit. But that's the preferred way to re-enter the twos. Just like we have a preferred way to trade the cyan bands and the wave 5s, this is the preferred way for the wave 2. Now, this is a good example, and I want to show when things get difficult. All right, when things get a little more difficult, like I said, that's what separates a winning session from a losing session if you're trading the wave 2 setups like this. This was the initial wave 2 short entry here. Again, this produced a pretty nice scalp, 8 to 10 ticks on a scalp if you were holding a runner. The stop got hit as we came back up again. This is, for the most part, a failed long trade here. The entry was here. It didn't move up more than a couple of ticks. Your stop was under the swing, and it got hit. Okay, so this is a stop out trade. Here's your next short trade here off the wave 2. Again, the crude a little bit choppy in here. You're able to get a small scalp and nothing more, right? And again, your stop would have been here as we came up through, one tick above that stop, and it got taken out. So at that point, you had a failed trade here. You had a little scalp trade here. You're looking for another re-entry trade. And what happened here was, again, if we do the line, I think I can just move this line up to here. As we came back down through it, we did not have an intervening short or long. Again, you can reshort that market, reshort it. All you got out of it was a scalp again, and then as we came back up through here, either above this swing or on the blue bars, you're out. Okay, so this is a little tough area, and if you just started trading this area in here, chances are good you'd be down a few ticks at this point. But not to worry, because this is a robust trade system that you can recover from very quickly, and I want to show that. As we got further along, okay, again, the wave 2 short setup here for a scalp, your stop's right above the swing, the stop got hit. You've got your line that you can bring in. When we trade down back through that line with magenta bars, short for a very nice recovery. Okay. Crude oil is a little more difficult to trade than other markets. If you've traded for quite a bit, you know what I'm talking about. And that's basically because that market is a cartel manipulated market. So it doesn't tend to be as harmonic as the other markets because of that manipulation. But again, the preferred entry is short as we went through here. I won't go through all of these trade setups again here, but again, this was the wave 2 long setup here. A nice trade. The wave 2 short setup for a preliminary nice scalp. Runner would have got stopped out here. No re-entry because we never went down below what would have been the line here with magenta. But then again, a nice wave 2 long setup here that actually completed off into a 5. So again, that's how I like to go about trading the wave 2 setups. And like in any trading, you're going to have to use your stops. You've got to use persistence, but I think you can see the market isn't going to sit here and chop through these. These are very important levels. The wave 2 setups, the wave 5 setups when they're harmonic. And if you trade them properly, you'll make money pretty much every trading session that you trade. If you don't, you'll have a fairly small loss. But again, if you follow this over and over and over again, you will see, if you follow these rules the preferred way, you're going to come out on top pretty much every trading session. This is our website, High Percent Trading. If you're interested in getting more information on this or getting a trial if you haven't gotten one, or better yet, becoming a member, this is where you can contact us. It's highpercenttrading.com. Again, you can hit the Contact Us button here. You just fill out some information. We'll get back to you. If you haven't requested a trial, you can request a free trial here, and we'll get you a 7-day trial. But again, I think you can see the power and the efficiency of trading these setups. So again, if you're not a member, or if you like what you see, please contact us. We can give you some more information. We can give you some invites to our trade analysis room, our live markets analysis room, and our workshops. So thanks for watching. Again, if you haven't watched the prior video on how to trade the Wave 5 setups with the cyan band, I urge that you do that. And you can see that when you combine the two, you get a very robust way to trade these markets. It makes you a complete trader. So again, thanks for watching, everyone. I hope this was beneficial, and hope to see some of you soon. Have a great day. Bye now.